Welcome to Pay It Forward, a series of the C-Suite podcast that we are producing in partnership with Payable, where we are exploring the ever-changing world of payments with leading experts from all over the globe. My name is Russell Goldsmith. On this episode, we're actually going to look at the future of merchant payments with two leading industry thought leaders. I'm delighted to welcome Ugne Borrachina, the CEO of Payable, and Robert Krell, co-founder of Silverflow. So welcome to you both to the podcast.
Thank you so much.
Now, obviously, you guys, your companies have a partnership together. Do you want to just tell us how you know each other, how that's all come about? Ugne, maybe you can
I will give the short story.
Yeah.
We do work with Silverflow. It's one of our partners, technological partners, and it's a very important partnership since it makes our more transactions move, and we're very happy to work together, and it's been going on now for a couple of years almost.
Brilliant. Okay, well, great that you've found some time to chat to us today. I want to start by looking at what you both think is the biggest shift in merchant payments over the next 5 years. So, Ugne, why don't we start with you?
Okay, biggest shift in the next 5 years. I mean, I could say that it's all AI and it's all going to be doom and gloom, but honestly, I don't really think that there will be like a significant shift. I think what will happen and what will take place in the next 5 years is improvement in the way that the transactions are made for all of the parties, and I think more focus on the seamless interactions for end users and better checkout experience in general. There's a lot of things that are happening around in general in terms of instant payments and availability of different payment options, but ultimately, at the end of the day, it's the customer preference and the seamless checkout that is really important for e-commerce in general. At least this is my 2 cents.
Yeah, and I agree with that. But I think it also creates for a slightly different shift as a result of that. What we see is that a large part of the back-end payment infrastructure is getting quite old. So it's difficult to upgrade that for the companies that run those platforms. So I think that you might see a shift of a next generation group of payment companies who are actually slowly replacing those older infrastructure that is still there. So
like Payable.
Like Payable, for instance. Yeah, absolutely. Like Payable, but also like Silverflow.
Exactly, yeah.
We both are on the front end of innovation. We both try to get rid of all these legacy systems. And I think that is what we will continue to see over the next 5 years, because there's still a lot of these legacy players across the payment market.
Yeah.
And I think it's a valuable improvement, right? Because we're in order to move forward, you need to make sure that all of the right things are upgraded. And I think from the technology side, it's very important for the key players, and you see a lot of legacy issues that pop up with certain players in the market as well. So, but I think it's also part of the improvement in general. So there's a lot of things in the back end and also on the front end that needs that to make sure that that the payments move forward and that the user experience is what the merchants are after as well.
Okay. It's user experience, it's looking at the data, having tools to actually analyze the data, do something with it. It's also the speed of innovation, I would say. So you see that in payments things move so fast, and if you have a legacy platform, quite often you can't really keep up with all the changes. So I think that those next generation systems to a degree will do the same, but indeed on the front end they will make sure that the customer experience gets better, and the customers in this case both are the consumers, making it easier to make the payments, but also for the retailers themselves, but also in terms of adding new functionality, doing more with the data. And yes, AI, of course, but in order to train AI, you want to have better and more data, essentially. So I think that is what you will see as the biggest mover, that legacy players are slowly being removed by more modern, more flexible, more eager, more data-rich, etc. Players.
Okay. Ugne, digital wallets are becoming the go-to method for many consumers now. Are we approaching a future where cards are no longer necessary?
I love this question. It's a really good question. And I think you have to understand the dynamics of how the wallets work and what the funding behind most of the wallets are. If we take out Asia, I would say the majority of the wallets are still funded by cards. So I think the cards still have a very big part to play in it. And I don't see it being phased out in any way, at least not in the nearest future. But if you look in Europe in general, it is still quite fragmented, and we don't really have, let's say, a single app or a single single one that would really stand out, apart from because we're talking about apps, wallets and just tokenized, payments with Apple Pay, for example. It's not the same thing. We're talking about wallet where you have identity, where you have certain like something like more like what Alipay, for example, is in China. So we don't have that, and I don't think that we are even close in Europe to have anything similar. But in my view, cards will still be very relevant and very important. Plus, the card rails ultimately provide something that other payment methods cannot do. It's security for the end consumer. It's the full chargeback process, which if you look at account-to-account payments are becoming more and more popular. And it was sort of destined as as a new competitor for the cards, but ultimately there is no process for to get a proper chargeback process, right? So and a dispute process in general. So still, cards are very dominant, and they will continue to be because the infrastructure that's already built around it, and all of the layers of security and the ease of infrastructure for the end consumer is there, and it's very hard for another payment method to do the same or in the same sort of terms. And as I mentioned also before, a lot of the wallets are still being funded by cards.
Yeah, and I think it's also interesting to look at what's your definition of a card. So is that the plastic that you have in your wallet? Yeah. Well, I can imagine at some stage that will be used less and less and less because everything is contactless via Apple or whatever device, could be via your watch and stuff like that. So the card as a plastic device may be used less, but as a network token, as an entrance point for you to connect you to your identity and to all the payment infrastructure, I think it will stay, and it will stay for a long while. The networks that are there, Visa, MasterCard, but also the other ones, they have a huge reach across the globe. And that makes it so efficient. If I use my card, whether it's a digital card or a token or any other version of my card, and go for business or holiday to any country across the globe, I can use that. And that is extremely powerful, and that is something that they have unique. And none of the wallets so far is able to show that reach into, let's say, global possibilities for me as a consumer.
I don't know if I'm alone in this, but I hope they don't phase out plastic cards completely, because I always carry I've got all my cards synced to my phone. But just in case I lose my phone or my phone runs out of battery or whatever, I've always got one card with me. Am I alone like that, or does everyone?
I still do that too. I think less so now than I used to before, because my phone is always charged, and I most likely will have a backup for the charger actually, or a portable one. But I think because ultimately, what is a card? A card is a chip, right?
Yes,
now if you look at what can be an alternative, there are bottles, that have chips inside that you can pay. I saw a guy paying with his thumb because, he put a chip, on his. So it's ultimately, it's not the card that you are. Like your sentiment is to, is that you can have that chip almost entirely in anything that you want it to have, right? Yeah. So, but I think that extra security comes from the fact of the preferences of how people want to pay, and that's a very big deal actually. So a lot of the times when new payment methods are also introduced, the reason why they're not successful because there's no adoption from the end customers.
As long as you keep using the plastic card and others are with you, people will want to accept it.
Yeah, correct. It's the same with cash. As long as basically there is cash, then it will still be an accepted form of, even though it's expensive, maybe then there's a lot of merchants that don't want to deal with it because it has a huge cost to it, which makes sense. But rightfully so, as Robert said, as long as someone will take it, you will have a way to pay.
Okay. Moving on to account-to-account payments then. Sure. Robert, let's come to you on this one. What needs to happen for them to truly compete with cards at scale, and also what role does open banking play here?
Yeah, well, I think this is a question the answer would differ by region. So I think whether it's account to account or open banking, if you introduce any form of new payment method, it has to compete with what is there in the market at that moment. So in markets like the Netherlands, for instance, iDEAL is very dominant. What does account-to-account add to such a market? In other markets, card may be dominant, but consumers, they're used to their current behavior. They have a certain preference of making their payments, and that's what they want to use. In order to convince the consumers to pay in a different way, I'm not sure if they really think, but as a payment person, you think, okay, what's in it for them? Why would they change? And there are a lot of arguments why they could change, but how do you sell that to the consumers? And the same to the retailers. I mean, to the retailer, you can say, hey, I support a large amount of payment method, but the retailers, to the degree, have limited possibilities to actually steer the customer behavior. So it's a combination of those two. How do you convince, if you introduce any new form of payment methods, how do you convince the customers and the retailers to actually start using it? Retailers usually is simple. We have this payment method, you should have it, and
it's free of charge for you.
It's free of charge for you, or very low cost, and that's an easy way to sell it to the retailers, especially if they don't have to do too much integration. But the question is, how do you make sure that the customers actually adopt it? And then you get to in the other space of how easy it is to pay with your phone.
How easy it is to dispute.
How easy is to dispute? How quick is it? Can you get a refund? How quickly do you get a refund? Is there fraud? Are my account-to-account transactions more fraud? So it's yes, it can be an interesting competitor, and there will definitely be, or there is a market for it already. But replacing, I think that's a big word. I've seen so many different payment methods being introduced, all with the promise we're going to replace the existing ones, but no one really has succeeded. Very few. There are very few new payment methods. I think Satispay, to get one, is one that I find quite interesting, because in a reasonably short time, in a complex market, they got quite a recent share of market penetration, etc. But it happens very few, but they're not really replacing anybody. It's more an addition.
No, I completely agree with Robert here, and I think I will mention again the dispute process. I think for it to be really, really successful, you need a good means for the end consumer to have a way to return their funds. And unfortunately, account to account, doesn't have that process, and it's not yet well defined, let's say. Hopefully in the future, if it will be, then I think it could be a good alternative to the card network. But there's definitely a long way to go, I think, until it really challenges, let's say, on all of the aspects, let's say.
Let's also be honest. If you have a sort of dispute process, there's also a cost to the dispute process.
Absolutely.
So on the one side, you want the account to account to be very cheap, let's say, but at the moment that you introduce chargeback prevention, which essentially is some sort of insurance, if you don't get your product, you get your money back to a degree. Somebody needs to pay that. And who's going to pay that? Well, essentially the use of those payments. So there are a few things interlinked. If you want to introduce it, that has an impact somewhere on the cost, because nobody wants to absorb the actual chargeback cost, of course.
Just moving on to, and I think you touched on this right just earlier as you were answering that other question, Robert, about different regions and kind of international payments and everything. I mean, you offer your customers a wide range of local payment methods. Will regional fragmentation continue, or do you envisage more of a kind of global standardization in payments in the future?
Tough question, but I think we will still continue to see it being fragmented, right? The world is a very big place, and there's still a lot of payment options, and those payment options are being replaced or maybe challenged or maybe improved at the same time. So I think for any merchant that is operating, globally, they still need to look for providers that can cater for a majority of those markets, at least, where they operate. It's not an easy feat, and all different regions have different challenges in terms of getting the funds out and also the speed of transactions and even settlements and all of this kind of stuff. So I don't really see it being improved that significantly, and I don't really see something that could be as the answer to that complexity that it brings. Right? There's a lot of talk about stable coins that could potentially be the answer, but maybe to a certain degree, but again, it's about also user experience, and also also it has to be adopted by the parties paying, and it has to be part of the infrastructure. So if it isn't, then if 5% of the people pay, it's still really relevant, right? If you look at the global scale, and if you look at how many payment options there are, how can it not be fragmented? It's very difficult, in my perspective, at least.
Yeah, no, I fully agree on that. I think that what I mentioned earlier, the consumer behavior is very difficult to steer. So as long as there are people like you who say, I prefer plastic over digital cards, then plastic remains an option. And the same in many other markets, many consumers, they have a strong relation with the payment method that they've been using for a long while.
Yeah.
So at the moment that a new payment method is introduced, whether it's better or not, in let's say our point of view as the supplier, because I have an opinion about how good the payment method is, and you probably have as well, but the consumers quite often, they don't see those security advantages or maybe chargeback or pricing differentiators or how safe it is in terms of tokenization or how easy it is for a recurring. That's typically what the consumers don't realize. So they stick with their own payment method until they get stuck. And this is also the reason why some payment methods suddenly grow quite rapidly. Think of Pix in Brazil. Is Pix great? Well, it's a fantastic product. Why did everybody adapt it? Because there's nothing before that. So Brazil as a market, credit cards penetration is reasonably low. The usage, it's also quite low. So many of the Brazilian people were used to paying with pagamento boleto, which is just not a very good user experience. And then something comes in with a fantastic user experience and you get an explosion. And it's this sort of, you see similar type of things in different countries. If there is a poor overall user experience, it's much easier to introduce a payment method that gains a lot of traction in a short time. But in an, let's say, more mature market, such as, well, I would say the European market, but also, for instance, the US market, which of course is very card-focused, it's very difficult to introduce something new which gets widely adopted. Why? Because there's not really a problem to be solved.
Correct.
Consumers in general are happy with their payment method. They don't want to do something else. They might if they get pushed with loyalty points or something, or if they actually see a benefit of discounts, or if they're other way being pushed to those payment methods. Right. But it's difficult to introduce actually a big one that conquers the globe, so to say.
Yeah, exactly, because that fragmentation, I think, is just almost impossible to conquer at the moment.
Just to clarify, I do like my digital wallet. I was just keeping my credit card as a backup.
No, for sure. No, sure. But there are people. I'm not.
No, it's just that my kids would think that I'm well in the dark ages. So I just want to clarify. We've got it on camera. I am using digital wallets.
We're cutting this out, aren't we?
No. I want it in. Listen, we've got a lot to get through, and there's lots of different topics we're going to jump around to. So the next one I want to focus on is tokenization. So Robert, I want to ask you about this one. Because I want to look at what impact that you see that is having on fraud prevention, and also what further use cases do you envisage?
Yeah, so tokenization as itself is not new. So as a result of PCI requirements, many payment providers and merchants were already storing their card details in a slightly different way, and you can call it tokens or an encrypted version, etc. They might be able to revert them in the original ones and then send them in, but essentially they're not stored. Today you see that you have different type of tokens, including network tokens or processor tokens or all different type of tokens. And part of it is to indeed still reduce the cost of PCI. Another part is indeed to combat fraud. And another part is if you use tokenization in certain cases, you might get interchange benefits. So yes, it does have an impact. If it's supported. Challenge it, at this moment there's not an overall 100% wide support on the issuers at this moment. So you do actually see performances if you use the tokenized, even if it would be a network token, or if you use, let's say, the plain card number. So the answer is yes, it helps prevent fraud. And in a lot of cases, it also reduces the cost, and it also may reduce the cost of being PCI compliant. But you also still have to measure and say, okay, is this the ideal route to follow for a conversion at this moment? But of course, Visa and MasterCard are working on this as well and trying to a degree, mandate these tokens. And I think for MasterCard it's 28 or so that everybody should support tokenization.
Okay. Another topic to cover, and again, Ugna, you touched on this right at the start, is AI. I don't think we can do a podcast about payments without mentioning AI. What impact is it going to have on payments, and how quickly will the transformation happen?
Okay, I'm no expert in AI, I have to say, and but I do have an opinion, and we shared some experiences also today with some of our colleagues. AI is definitely a disruptor, and I think there's a lot of use cases for it that could be well applied in the payment space. But I think there's also many challenges with what AI brings, though also some forms of sort of PI, not really AI, but machine learning has been already used a lot in the payment space. And if you talk about fraud prevention, monitoring, so I think there will be a huge improvement in that, in a way, right? Because the application is very valid and needed, right? And also the fraudsters are getting, more clever and sophisticated. So I think that will be applied a lot more, and we see that already happening, as it comes along. There's probably some other areas as well, in terms of customer interactions, operational resilience, and sort of operation efficiency. But do I see that in the next 5 years, like everybody's just going to be using, all of the payments, will be somehow AI driven? I don't really see it. And we also had a chat about, chatbots, and that a chatbot could, for example, potentially make a payment for you and choose, basically the best, option from the internet. But that also gives quite a lot of challenges in how the whole marketing works. Let's say, what would that look like? So we're looking at some things that are in the future are really far-fetched in a way, but it is possible that it could happen. It's just that we have a lot of unknowns in terms of the regulation, security, safety, what kind of other aspects we need to look into to make it also secure, right? And as a financial institution, for us, we're dealing with third-party funds. So anything that we do, we're regulated. We need to make sure that the data that we keep or information that we keep, that is all aligned and within the bounds of what we're able to do.
Robert, what's been the impact of AI on your business?
Well, I largely agree with what Ugne says. So in the core payment processing, there are so many rules that you have to comply with. And yes, you can optimize certain processes for sure. So think indeed of fraud management or conversion optimization. Also, for instance, scheme fee, interchange fee calculation, where you can have smarter models to do it in an automated way for you. Indeed, in the customer support type of thing, reading large documents, because typically in payments it can be very large documents to get. You can even get AI to write certain parts of code for you on behalf. But that is not really related to the payment space. It's all a little bit adjacent to it. Also, self-paying AI agents. Is it a task for the payment providers, or is it actually more a task for the retailers using it? But what I do think is that AI in general needs to be trained. Because otherwise they can't make a decision. And how can you train it? That is essentially by providing high quality data, easy to read data. So I think that how does it impact us? As you know, we've set up Silverflow within our minds that we should be very transparent and clear in the data that we provide, so that you can actually do something with it. And that is a difference between how we look at what's going to happen in AI. Yes, we share the data, we give it in a very fancy way, and our customers can build applications on top of that, where quite often many of, I would say more legacy platforms, it's sort of a black box. You send something in and you get something out, but you don't get the full transparency, whether you're looking at conversion or refusal reasons or interchange scheme fees or chargeback reasons, whatever. You put something in and you get something out, but you don't really know what's happening. And that's where we see sort of the benefit for our business. We help our customers with that data. And maybe in the future we will come up with our own solutions for optimizing those products. But essentially that is more how we look at the AI elements of it.
Okay. Final question. I want to finish on regulation.
Amazing.
Yeah. I thought I'd leave the tough one till the end. There's two that I want to touch on. I was keen to see how you saw regulations such as PSD3 and the AI Act impacting merchant payments in the coming years. Ugne, let's start with you on that one.
Great, fantastic topic. I'd love to share my thoughts. Look, I think the improvements that are coming in the PSD3 is mainly around the security and safety of transactions, which is always great. Is there anything that that is worthwhile mentioning apart from that? I think not really from my side. Maybe Robert wants to add something there, but.
No, well, we are a different type of business. You have to be regulated. We don't. Our business model doesn't require to be regulated in that sense. So we help our customers making sure that they comply with the regulation. Of course, security is for us extremely important as well. But we're in a little bit lighter field. Our customers have
Yes.
comply with all the regulations. So essentially,
So we read it, and then we ask basically our partners to help us comply
Exactly.
with it. But I mean, it's PSD3 is a reiteration of the previous one, and it's just certain improvements and certain moves forward in terms of making it a smoother and a safer place basically for end consumers to pay ultimately, and some differences in terms of how the payment players are operating, but I think that's not really for this discussion.
Okay. Well, listen, we've covered a lot of topics in a very short space of time, but I want to thank you both for taking some time to join us, Ugne and Robert. Thanks so much for sharing your insights.
thank
Thank
you
you
as
so
well.
much for having us.
We would love to hear your comments on this episode. You can find the links to our social media feeds on our website at csuitepodcast.com, where you can also catch up on previous shows and find supporting show notes, plus links to where you can follow us on the likes of Spotify, Apple, and YouTube, as well as our contact form should you like to get in touch with the show. Don't forget, you can also follow and catch up on all previous episodes of this Pay It Forward series on Payable's website, which is at payable.com/podcasts. And finally, you can find me, Russell Goldsmith, on LinkedIn. But for now, thanks for listening and goodbye.